there. I got a nice little phone right there. And so cheers for coffee hour. If you're here with me. And hopefully we're streaming. Again, you can visit our school community. I'm going to place that link in there again. Again, hello, YouTube people. We got cut off for a little bit. We're back with Coffee Hour with Greg. We're analyzing non-farm payroll. Uh, that's going to come up. Actually, the non-farm payroll is coming out tomorrow. And this is the week ahead, right? So we do have the Bank of Canada rate decision coming up next week. So I look at the flags, Canadian flags in play. We have lots of inflation data. So I like trading the euro on that. And then we have producer price index on June 11th on that Thursday. Previous numbers 1%. No forecasts given. And then we have GDP out of the UK. So I look at the flags, and this tells me what to trade. I may not pay so much attention about these numbers here, except here with the rate decision. If they cut rates, we can see the dollar go up versus the Canadian dollar. But I want to see, hey, what am I going to be trading? I want to trade something with the U.S. dollar in it that makes kind of sense there. And I want to trade something with maybe dollar CAD or CAD yen, right, or euro CAD, right? So I can kind of know what I'm looking at. Why? Because traders around the world are going to be looking for activity. They're going to look at a driver, a catalyst, something that gets them excited. It's going to be a news event, right? Okay, so let's look at let's look at this week, tomorrow actually, and tomorrow we have non-farm payroll, and the previous number is 115,000 jobs. And we don't have a forecast. Usually we get a forecast, right? Historical values. Here we go. Here's our forecast. Okay, so here we've been on this. Usually a roaring economy, we're clicking out like 200,000 jobs. Lately, it's been more in the 0 to 100,000, right? So the actual they're actually forecasting the gray is a forecasted line. They're looking for maybe a higher number coming up higher than 115,000. And so if we do get a higher number than under 15,000, I would love to be trading either the euro or the dollar yen. Usually the euro will respond positively to a positive jobs number. Okay. Usually when we have good U.S. news, it benefits the dollar. The euro benefits the pound, the Kiwi dollar, the Aussie dollar. If the news is bad, like maybe only like 10,000 jobs are created, we usually look for the dollar to rally. People become fearful. They start running into dollar into the bond market, right? They'll buy treasuries, right? It's going to be risk off, right? The economy is collapsing or something like that. So the dollar is usually a fear play, okay? So if they start bombing things and the war's not going well, people become fearful, and the dollar is like a piggy bank, right? It's like your mattress, and I used to have something called mattress money, where you actually would put money in a mattress and hide it from, and in maybe Far Eastern countries too, when the banking system was, people were scared of the banking system collapsing. They go, well, yeah, they won't give you your money. You can't withdraw it because everybody's like, they're making a run on the banks, right? So what people would do is put money in jars and bury it in their backyard, or put money in a mattress under the mattress, right? Because hey, you're sleeping there, nobody's gonna get it, and maybe you got a little something to say somebody comes to try to get it, you get right. So the dollar is like a mattress, but when everything's safe, well, I keep your money in your mattress. You put it in the bank because everything's, you can trust it. It's called risk on, but risk off would mean if we had some type of a catastrophic economic event. Okay, so I hope that makes that kind of clear, right? So let's go ahead and go to some charts. And before we go to some charts, I want to show you what we have. We actually did some trades yesterday. All my troubles are so far away. Okay, we had we had a breakout in our we have a live trading challenge, a $50 to $50,000 trading challenge. Okay, and so and I had this idea that if I could get some traders together and trade with them for 3 nights, right? Doing I like trading Asia session. That's why I'm kind of late to the coffee hour. Why? Because I was trading like around like 7 to about 11. A couple of 4 hours, right? I was, we're making money. It was great. My group, we trade together for about 2 hours, from about 7 to about 9. So we get a group of traders together, and then let them look over my shoulder, see what I'm trading. Also got some powerful tools that I had programmed. I had this AI program, called Nemo, or the Trade Navigator. I got a strong sell on pound yen. I mean, all the dials, like all these dials, they're like red, red, red. It was pointing, as a recommended sell, and the artificial intelligence had 100% confidence that I should sell the pound yen. I go 100%, right? That's like, is there anything 100%? You see, it's 85%. I'm kind of sort of sure, maybe on strong conviction, but this, Nemo got 100% confidence, strong sell. I got maybe that'll work, And so I'll show you. I'll play the. This is what this is a little short video.
All right, ladies and gentlemen, all aboard. Here we go. We've got the southbound train. We're riding pound yen. We got a break below the 2214.60 area. With the Bank of Japan intervention. And so a little bit of a retrace back to the 200 simple moving average. We went ahead and got short, and we're looking for a retest of these lows around the 214.43 area. So stay tuned. We'll see how we turn out. We're already in the money. Happy pipping. This is Dr. Craig from Lee Traders University and the $50,000 to $50,000 challenge. And there's more to come.
Okay, so we got confirmed breakout. We had our trend navigator give us a shout out there, and then what happened was we actually took it on several accounts. So I can show you we're using a strategy, the same strategy that the turtles actually used in order to make hundreds of thousands, if not millions of dollars in the market. And so we were using the opening range breakout. And so, and we're using our spreadsheet. We use this. This is our money management compounding spreadsheet, where it tells us like you type where your account balance is, and usually we're all starting at $50. And then we have a position sizing, how many pips to go for, and what our profit target is. And then what we do is we go through trade by trade, right? And so from here, there's 30 spots here, and on the 40 spots. So 40 spots on the 40ish, you're making $50,000, right? But if we do just 30 spots for 30 days of the trading, we're at 15,000. So we're using, all of our people challengers get a copy of this, right? And so we did some trades and things like that. Now this trade went longer than our session, but we had it already set up. In fact, I was in this, but my take profit was a little bit, so I missed it. Went all the way down to 214.35. I had to go to the bathroom, came back, and it was already snapped back. I had to wait a little bit longer. And we actually got short back here. Look, right there, right? And then I didn't have my take profit in. And so it went all the way down and snapped back, so I had to wait. And then so we had we hit our target there, which was pretty cool indeed, right? So in fact, we have another video here. We'll actually hit it.
Okay, here we go. We're closing in on our target. Got a southbound breakout from the pound yen, and we're looking at 214.49 is our target. See if we can go ahead and tag that. If not, we're just going to take our money and run here. Let's see if we're going to hit it really close. We're pushing through. Pushing through. We're just gonna close it out manually.
Okay, okay, you heard in the background. That's the MG4. That's the other account I was trading, and we had went ahead and we had cut that. We went ahead and closed those trades out. So you heard in the background the whoa, whoa, whoa. That's us closing about $400 off another account, a larger account that was up to. It was $2,000. It was at day 21 or trade 21 on our spreadsheet. So we had this account going for our one that started from it was like at $72, and now we're made another 15. So it's small compounding gains each day, and then if you're trading multiple sessions, you might move 3 or 4 days on that spreadsheet. So that's why, we really trade 20 days in a month, right? But we can have multiple trades in a day, and sometimes our trades are more than 20 pips, so we can move farther down that spreadsheet while also maintain discipline and risk control, because we're going for like 1.5 times our risk. Excuse me, 1.5 times our risk.
There we go. And we've done it. Yeah. We got it. We did it. Awesome. Okay. Well, guys, that's how we put our trades on. We've been in it for a while. Opening range breakout. Southside break from the 214 break, 214.65 break. Happened around 3:19 London session. That's about 8:19 UK time, and we're able to walk away with some pips there. All right, guys.
Okay, so that was so we set these up, and sometimes we set multiple trades up and try to move them to break even. In fact, we had one of our students that really did really well last month. He didn't hit 50,000, but he did okay.
Dr. McLeod's 50 to 15,000 challenge that I took part in last month. I started the program with about $100, and I think I ended with about $1,600. I could have been more consistent, but due to work and travel, I had to take a couple days off, miss a couple trainings, but the program itself is awesome. Dr. McLeod makes himself available for questions. The resources that he provides are phenomenal. I cannot continue to sing his praises for those, just some of the resources that he provided. I am doing it again to continue to grow my funds, because that's my goal, to continue to grow it. And so I would definitely recommend it to a newbie, someone who's just starting, just to access the wealth of knowledge that Dr. McLeod has, and just the information is just invaluable. So if you're a newbie, you're just starting, just trying to get your feet wet, and it's just good experience. So I would definitely recommend it, and I'm going to take it again this month to continue to grow the funds, to exceed the 15,000 is my goal, and then just continue to grow it. So staying disciplined is key. I've hit my head a couple times, but staying disciplined and not quitting, those are the keys to this. And I recommend it, and use your resources, and definitely tap into Dr. McLeod for any questions, because he's definitely available. Thank you. God bless. Dr.
Okay, guys. Yeah, so just another shameless plug there. If you are interested in doing that, the June session is closed. You get on the waiting list for July. Spots are going to fill up fast. I'll go ahead and pop the link in there. And again, it's 50 to 50. I guess what we have done with this challenge is, if you go just another week, if you do another 7 trades after this, that gets us our 50,000. And so that's really powerful. Just using the same process of scaling your account responsibly in a disciplined manner, using one strategy, using one strategy, one indicator. We're just keeping it very, very simple. Okay. Anyway, let's go ahead and get back to our analysis. Let's go back let's get into trading views. Look at some charts. All right. All right. Trading view. And then if you, right. And so we're going to start with the US dollar index. I love trading view. I use that for my chart analysis, even though I also trade on them too. You can go over to, so we're going to start with the way I arrange my trading view is I have all the majors, and then I throw gold in there too. I keep the majors on one tab, then I have all the Forex gang, Turkish lira, yen, all the oddballs over here along with the majors, right? And then I have the yen pairs. I have the yen pairs isolated as one group too. That keeps me organized, guys. So this is a pro tip on how to be organized when because you get so much information in the market, and what you want to do is to have a way of organizing and approaching the market in a systematic way. Okay, dollar index, U.S. dollar index, the basket of currency pairs, currencies versus the U.S. dollar. The dollar is the big dog. The dollar is the reserve currency. It's the Chuck E. Cheese token in the arcade of stuff, right? And then we're going to put up our template. Hello. How about open templates? Bulls versus bears. Bulls. There we go. Oh, this is not it. Okay. We're going to start with I like starting with the weekly chart. Actually, I'm starting with the monthly chart. You want to get lots of, when you do, this is called top-down analysis. So I'm going to do top-down analysis. Really, I don't want any indicators on there. I don't want, maybe a moving average on there, okay. But I want lots of chart data. I want to go all the way back. So we're here. But remember, we got to know where you came from. Knowing where price came from is very important, right? And so we can see that we have an uptrend in the U.S. dollar. U.S. dollar index, higher highs and higher lows. Then you back up a little bit farther, go back maybe like 40 years, like when I was in high school. It was a long time ago. Fred and Barney and Dino, George Washington, back in the day, bro. Well, that's the dollar's been losing value, right? That's why you should get some gold. Get some gold. See, there's a dinosaur right there. Look, 1960. I was born in 66. They put a dinosaur on the year I was born. Wow, that's a lot of shade from TradingView. I'm not gonna recommend them anymore. Dinosaur indeed. Fossil. Artifact. Here we go. Oh my God. All right. Too much fun. We have a lot of fun. I tell a lot of jokes. Dad jokes too. They're not very good, but it's a lot better than sitting around boring, staring at the screen going, anyway. Monthly chart, higher highs. We're inside that. That's June. We're inside that candle, right? It's green. So my bias is long. However, let's drop it down to a weekly chart, and we can see that we are making some higher highs and higher lows, but we also have some lower highs there. So we got this triangle, right? And either we break north and keep going, right? So U.S. dollar index, let's drop it down to a daily chart, right? So my bias is, so even though we will see the other currencies will fight back, right? Aussie will go up and keep me, but then the big overall monthly downtrend is going to smoke those guys, right? So we said we have this the market tide. The market tide is bearish. I mean bullish for the U.S. dollar, right? So we have this bullet. Let's double check that I'm sharing my screen. All right, good. I think last week, unfortunately, guys, what happened was my screen was stuck on one. So we're sharing the whole screen here. Right? Tide, right? And you want to be able to analyze the tide. Let me give you a slide here, right? So you get the market trends, the way. That's the tide. That's the higher time frame. You try to swim against that. Like I went to Maui and I went snorkeling, and there's this a little island, Molokai or something like that, where they drop bombs on it. They use this target practice. You can't go there because there's so many unexploded bombs there. But we went snorkeling there, and there's a lot of like beautiful marine life there. And the captain of the ship said, "Whatever you do, don't go in front of the boat. I'm going to turn the boat this way. Go to the back of the boat because there's a current, there's a tide. It will take you all the way out to Tahiti. You can't fight it. The strongest swimmer. In fact, if you're caught in it, just relax and let it take you. It'll take you for miles and miles and miles, but then you can swim back." I'm like going, "Oh no, I'm staying right next to the boat, right?" So I mean, the tide is so strong that Olympic swimmers could get swept out and go. So that's the tide. A lot of people, when they're trading against the trend, they're trading against the market tide, and then they get smoked, right? And so there'll be these ripples, these counter trend ripples, these waves that go that may you can trade the waves and you can even trade the ripples. When I scalp, I trade the ripples, but the ripple going in the opposite direction isn't the market tide. And sometimes if you just move your stop up and and reduce your position size, you can ride out that ripple so you can catch that tide. And that's what I actually had to do with the pound yen. That even though we had a confirmed breakout, that thing was trying to, it was trying to, it was a dirty dog. You kept on going up 10 pips and then dropping 5, and going up 10. You kept on like trying to shake you out. But then they got tired, and then when London opened, just that it a smooth move, right? So again, we have waves, counter trends against the tide, and then we have ripples, right? Long dollar and lose money. Why? Okay, I got kicked out. They didn't want to hear what I have to say. Okay, we're back, right? I was about to unveil the there we got shoulder, head, shoulder. See that? I mean, all right. So they might be, they're fighting, they're struggling against the machine, right? Lower high, higher low. They're trying, right? They're trying to get this down, right? And if they can, they might save their economy, right? Let's take a look at Bitcoin, BTC, USD. That's another one. No, Mark Cuban says, "Oh, he's out of there." Everybody's crapping on Bitcoin now. This is probably the best time to buy when everyone is like, all the panicans are like going, "Oh yeah, it's not a hedge, it's no good, it's no good." Proverbs. They say it's no good, and they go rejoice, right? Well, I know I had a breakout there, and I looked for the double bottom there, and well, that's why we have a risk to reward, and we've been stopped out on that, right? So that didn't hold, right? And well, it really didn't hold. So we dropped hard, right? But it's the same. Oh, let me back it out. Back it out. Right? We're still in a buy zone, right? Because wave two, we broke the low, right? So I was looking at wave one, wave two, and this is our C, right? We can have a double bottom. Wave two can come down to the low of the previous low, and we have a double bottom right here, right? We almost have a confirmed double bottom. If we go lower, that will probably means that we go much lower. So they're going to defend this 60,852 area. It was the low of February 6, 2026, right? This is the, let's say, the last hurrah, because you can have a walking, right? 1, 2, 3, 4, 5, walking 5. I'm thinking that this is probably some type of line in the sand they're going to draw right here, try to defend that, and then all the people that they shook everybody out, right? They probably said, "Oh, shook out every one of these fibs, no good, no good, no good, no good." Oh, Fibonacci of last resort, baby, the 88.6 Fibbo. Look, 88.6 is 62,850. Very few people talk about the 88.6. It's like smooth jazz radio, all the way on the other side of your dial. 88.6 smooth jazz, right? These are the smooth jazz at 78.6, 88.6 on your FM dial. And then boom, we get a breakout, right? So we closed, price wick lower, but closed above the 88.6. So it'll be interesting to see what happens tomorrow. Maybe non-farm payroll is super positive and we get launched from here, and all these people will have boo-boo on their face, right, for dumping it. Or this could be a psyop where they just want you to get out of the trade. They want to shake everybody out. And this will probably be your best opportunity to get yourself some Bitcoin, baby, right? Again, remember I told you about buying there's blood in the streets, right? But the corollary to this is another Wall Street aphorism is never catch a falling knife, right? You know why never catch a falling knife. That's a knife. You ever try to catch a falling knife? You're like, oh, let me catch it. No, let that sucker hit the ground. Don't catch a falling knife, right? We don't want to catch a falling knife. Don't be a hero. Don't be picking he who catches tops and bottoms has a smelly finger, right? There we go. Well, he can catch a knife. Or you can catch all these falling knives. Wow, it's raining. It's raining falling knives there, right? That's a falling knife right there, right? Now my dad was a butcher and he had a chainmail glove. He was like the first Michael Jackson. He had the one glove. I go, Dad, don't you get two gloves? It's like, no, you use a knife in the other hand. He was a butcher and he has a chainmail glove. I thought the thing was really cool. I think I took it to for Halloween dress up at school. It still had blood on it too. It was like, scary stuff, Greg. Anyway, Bitcoin double bottom. People are all scared and talking about it in the news, right? If they're talking about it in the news, then the other count, the alternative count, right, is that if this 5-wave ABC alternative count would be this is an actual 5-wave down, right? Maybe 1, 2, 3, 4, 5 downtrend, right? And then we actually turn into, and it could go lower. This will allow it to technically go lower, right? Before it actually shoots up, right? Until it shoots, and then this will actually be like this, right? And then this is where people don't, Elliot gets a bad reputation. It's like, yeah, and I see dead people, right? Right? Because if this goes lower, people go, oh, it's over, and then boom, we get this breakout, right? So we could go lower. The double bottom will probably be a test for people, and then once you're out, this thing turns around, right? So I'm short-term bearish, but I'm long-term bullish on Bitcoin. Okay. So anyway, yeah, guys. Again, if you're interested in our 31-day challenge, if you like the show, make sure you thumbs up and like it and share it. And it really means a lot to me. It makes gets our message out there. I'm building an army. I'm trying to build an army of profitable, confident traders. Using a proven. This has been done hundreds of times throughout history, right? And I just decided to write it down and create something around it where, hey, you have a plan. Most traders, when you fail to plan, you plan to fail. We got the blueprint, we got the plan, we have the strategy. I have 30 years of experience, and I'm want to build an army of people. Take it to those brokers, take it to those hedge funds, and go ahead and take our money back, right? AI is coming for you guys. They're not coming to save you. If AI is going to take your job, right now you're probably training AI, and your job is going to be gone. Or you're already gone if you're watching me, and maybe you got some severance pay, and maybe you can invest in your education, learning how to trade. Where you can be anywhere in the world. I've been on the beaches of Maui, the Bahamas, Jamaica, placing trades, making money. Um, just a laptop or a phone and an internet connection, and you can make money anywhere in the world, right? But if you're trying to do this on your own, you've been doing this for like 10 years and you still haven't cracked the nut. Well, I have, and so and my students have, and so I I look forward to helping you. If you think that we're a good fit, click the link. 127 bucks. What do you got to lose, right? Um, my name is Dr. Greg, and I wish you all the best. Okay, peace and pips. Cheers. Talk to you later. Bye bye. Okay. All right, close this out. Close this out. Okay, finally, trying to close it up.